Hi traders, this is Ken Calhoun, President of Day Trading University. Welcome to Transform Your Trading. You're about to see a preview highlights reel of videos taken from videos included in the Transform Your Trading Home Study downloadable video course. This was originally a series of webinars I did, and it's been so popular with my traders around the world I thought it would be a good idea to put together a video highlights reel so you can see exactly what topics are covered, how it can help your trading, and why it's such a good idea for you to go ahead and order your course. My thinking is that in sharing this detailed video highlight reel with you, you'll not only get some useful information you can use immediately, but also give you a taste of what's to come in the main course. Here we go. Okay, the first session, tonight's session, we'll look at your inner game and trading mindset. What I need to teach you is how to do things specifically. They're different, like how to define your trading edge, before and after tactics for changing your trading game, a trigger pull, squeeze technique, a good technical trigger process for how to trade differently, and much more. We'll be learning about how to capture better breakouts with entries and exits that are done differently. And the way that we do that is to teach you how to manage entries and exits with a more professional approach. Use what I call core shift strategies for improving your trade results, and tweaks or minor modifications for getting more, squeeze more out of each trade. And finally, in the third session, what I call the profit picture, and this is trading for better P&Ls. And the goal in this is to help you learn how to scale up and use more dynamic position sizing for our current markets, illustrated with actual real charts and trades and so forth. Your trading plan blueprint for trading transformation. I want to give you before and after changes, and a personal action plan. So that's kind of the framework. And what that will do is not only reduce the total cost of your stop, but it gives you a chance to take more shots at your trades. Define your edge, be your own coach, and look at what your bounce back plan is. We'll cover some of those techniques later. One of the things that I'm going to look at too in the second session is how to improve your entries and exits with specific patterns, core shifts, and day and swing trading pattern exits, the depth of cups, the time in trade, the price of your entries and exits, and third, how to simplify it so you can use it regularly with the before and after game plan. That's for next week. And the last week we'll be looking at P&L progress, financial indicators, things that you can do in terms of using, let's say before you may have used chart patterns as your primary. After, I want you to learn how to use your P&Ls, or your stop loss cost, as your primary indicator to help you with your trades. A method to use, actually there's several methods to use. One of the things that I want you to do is, before, this is these are a couple of technical things. Again, I like to focus on those primarily, but always check, this good quick technicals are, before you trade on any trading session, always pull up your 58. The mode of all those data points would be roughly around $50 because you have one at 50, one at 45, one at 47, and one at 58. So to keep stop losses at, say, $35. I want you to forecast the length of trade based on the most conservative, shortest length of recent market runs for how many days in a row it moves before it stops moving for what's coming up in the days ahead. So that's what losing traders do. Take large stops too late, too much, don't have the knowledge and focus, decision-making skills. Winning traders only trade with a defined edge. So I know what my edges are. I don't trade in range days. I don't trade in weak sectors. I don't trade unless the price comes to me. And I use buy stop orders to make sure I don't get in until the price comes to me. And I want you to start doing that too. Trade breakouts and pivots with specific setup patterns. Use known entry and exit triggers, ones that are in your hip pocket that you've been trading for years, or if you're a new trader, ones that you're just learning about that you want to paper trade until they become familiar with you and you understand how to best leverage your entries and exits more professionally. Winning traders also have a defined process that they follow. I like using a flow chart myself, but you can have a process that step-by-step walks you through what type of decision support tools you have before you scale into a trade. Also, experienced traders, we treat it like a business. I'm in it for the money. I'm looking at extracting as much money on balance as I can out of these breakouts and pivots on the long balance, on balance with entries and exits, and I also have the wherewithal or the discipline to stay clear of markets where I don't have an edge. That's the thing, is the balance. You scale into these that work out, right, until you're in the money, take that out, and the stops have to be real small. And on whatever time basis that is, that's the type of thing you want to do. Your inner game, how to redefine your core approach to trading in your head. What are some of the differences in the approach that I, as a real trader, have taught you? Redefine your core approach to trading in your head. What are some of the things that you're going to do differently based on what a real trader does? And how are you going to adopt those, transform those, change those? Anyways, I hope this has been of helpful to everybody. And this is a lot of my very best tactics that I use in my own actual trades. And it's a good comprehensive step-by-step approach. One of the first things I want you to just give some thought to is whenever I ask you a question like this, it's not supposed to be rhetorical. I want you to write down, okay, I need to go test, am I doing these things, okay? So for example, maybe you started off life doing trading stocks like most of us did, and then you started day trading, and maybe you got kind of break even or hit and miss, but now you wanted to start trading Forex or E-minis or trading ETFs. One of the things that I would encourage you to do big picture strategically is revisit your choice of instruments that you're trading. Test out whether or not you're better as a day or swing trader or a longer time frame, and test out what you're doing. Just paper trade, on a handful of different instruments using solid professional breakout strategies. That's one of the first things in terms of transforming your trading approach is make sure you're not trading things like risk. Once I'm in the money $100 in a trade, once you're in the money, say $100 in a trade, where's your stop going to be? And the answer should not be use a chart. You say I want to lock in at least $80 or $70 or some percentage of profit of that trade, regardless of what the chart of the market does. Because your goal is to sweep profits out of your trades consistently, incrementally, bit by bit, so you're nibbling away and taking money out of the markets. If I'm in the money, I don't know, say $500 like I was in this FAZ back when it was, I don't care what the chart says about should I stop out if there's a horizontal support line and that would make my profit only $300 or $200. A moron would teach that. Professional trader, I'll tell you, if I'm in the money $500 in a trade, I'm going to take 475 of it minimum, right? I'm not going to give anything back. I'm in it to make money, okay? I mean, I'm really clear about that. I'm very explicit about my trade. So what's your number is my point. What's your number in terms of your exits? The pattern exit is helpful, but what's more important is the P&L, the unrealized P&L, and how do you simplify that so you do it consistently? So from a financial indicator and P&L progress before, maybe before what you'd been doing is using chart patterns as primary. After, I want you to use P&L as primary, chart secondary. My 30% rule, as I've mentioned, is that you want to figure out how to be, how can you still make profit even if you're right only 30% of the time? And the answer is, anyway, you get an in-range day. That tells me to trade lighter size and use further away or more skeptical alerts because the market is not at a strong dominant 2-day high or 2-day low breakdown. So I will adjust for that by using dynamically lighter size and further away triggers. And that's an example of, good professional approach of the real-time dynamics. A good trader will tell you that. Those are the kind of signals we look for. And what are the trends doing? Is the trend near 1.0 like it was here in the NASDAQ trend, near 0.89? Or is it a bullish trend? Right? That's one thing that makes the math work out. Make sure also that when you're wrong, the way that you cut your cost of stops is start small size. Notice the share size in these trades was only 70, 50, 10, 40, 10, 10, 10 shares. These are all itty-bitty test trades. That's one of the key changes I want to encourage you to start making is do more pilot. I call these pilot trades. If they don't work out, fine. No harm, no foul. You lose a little bit of money, right? Maybe even have a red day and you're in the red for a bit. Days that work out, okay. You're in the green a lot more. So the $150, I don't sweat it. It's all in context. And so make sure that you're doing that. Focusing on bunny slope swing trades that, or whatever it is you're looking at, or maybe, if the market sells off, continuation moves up in the bear ETFs, like I told everyone to go long in on Saturday, boom, right, nailed it. It's very adaptive, the approach that you take, and so you need to integrate multiple data points and realize that there's no fixed, and the thing is it's all adaptive. If the market is uncertain, use further away entry triggers. If the market's very aggressive, you press the pedal to the metal and at least I'll trade heavier, larger size, more entries, more dynamic trading. If the market's quieter, I'm going to sit on the sidelines and not trade as much. And so having a kind of you're in a car and you figure out how how hard to press the gas pedal based on internal volatility of the market and 2-day high-low breakouts, yes or no. That all goes into the decision-making process as well. Real life is you're competing against guys like me, and we're among the best and the brightest out there and best trained, and so you better get your chops up before you want to wade into the deep end of the pool with those sharks, right, kind of thing. So, you know, we're all out there. It's a zero-sum game. We're trying to take money from the markets and winning trades, and so, you know, make sure that you are properly prepared and you're not bringing a butter knife to a HK-95 gunfight, right? Make sure that you're well prepared. So, sobering thought, but an honest, you know, from an honest educator, I'm trying to give you guys the truth about the situation. So, all these things can help you be aware that it takes time, and, you know, do well with it. You know, I wish you guys the best. Many of you have been with me for a lot of years, and hope to continue to see you for, you know, for many years to come. I want to give you my best and give you honest, candid feedback on how this stuff works. So, anyway, I've given you guys, you know, $1,000 grade training for a tenth of that or a fraction of that. So, but that's why I build trust. That's why I have more testimonials than anyone out there in the industry, because I want to give you guys my best. That's how you live your life. Be of service to others, right? Give value first. And then that builds trust and respect, and that's how we do that. And I hope I've engaged with you and given you some honest things that can really help you. So thanks for being here.